I spent the weekend doing some deep research on this new solar stock I found, TYGO Energy, TYG as the ticker. If you're on TikTok or YouTube, you can go to my profile and find a link, and that link is the link to the big report that's in my newsletter. I did a full deep dive report on it, and I put it out to free and paid subscribers. So check it out if you're interested in small cap stocks. It's got about $200 million market cap. Some of the main highlights are they have no long-term debt. They just paid down their $50 million note. They have a run rate at 100% growth. They're growing revenue 100% right now, and that was year over year. And the two most recent quarters, that averages out to about 100% growth rate year over year. They're on track to grow about 100% this year, and they're doing really well in the European markets. They have a lot of competition, like in Germany and Czech Republic. They're doing really well, and they compete with some of the biggest players like Enphase and SolarEdge. SolarEdge is the biggest company in this because these products are actually these MLPEs. They're basically just these little hardware devices that go on solar panels that let you know when they're overheating, and they shut them down to prevent electric shocks and fires. So basically a safety hazard. They're a necessary thing for the solar panels, and that's like 90% of their business. But the smallest part of their business is battery storage and home solar comprehensive packages, and that's been growing really well. If you look at Tesla's numbers, Tesla's been growing really well and they're in this market. And to me, this is going to be the next big thing. They call them virtual power plants. It's in really small. It's really small liftoff here in the United States. This is the Department of Energy report they put out in 2023 originally, and they just updated it. And it started to pick up after they put out this report back in 2023. The gist of that is you take these residential houses and they have solar panels and they have a battery storage. And when there's a stress on the grid, they can send power to the nearest house or even to farther off on the grid. The writing on the wall, it's been for some time since the data centers started to really accelerate, is that the United States infrastructure for the electricity demand is not going to meet the demand requirements. There's a gap. Like we need more electricity, and they can't build these gas turbine power plants fast enough, and these natural gas, like they're going to have to exhaust everything. And I've seen this 2 years ago, and like other people did too. But a lot of people are just kind of still focused on what's been traditional, like natural gas and even nuclear. But the nuclear power plants take a long time to build. To me, these virtual power plants could fill a big gap. Their products are competitive. They're not the best. The best ones appear to be Enphase for my research, Enphase and SolarEdge. But these TYGO Energy residential battery power, they compete on flexibility. Like they don't have to be connected to every single panel. In some countries, they don't have laws about that. It's actually safe. It's a lot safer to have it connected to everything. But right now they're competitive on the flexibility and the size too. They're in 5 megawatt increments, where Tesla and some of the other ones are way bigger. So if you don't need a lot of power, you can just go with with stack the fives. Like they're modular, you can increase as needed, but they're not like the other companies have like a way bigger size. So there's a lot more flexibility with these TYGO, and they're cheaper. They're cheaper than a lot of their competition, not versus the Chinese, but that's what would you expect? And it's like the stock. It's about 2.5, 3 times sales. And if the sales grow like they are, I think it's a fair price. And especially if it goes down to like a 1 or 2 times sales multiple, they're looking at profitability. They expect to be profitable soon. Their management's really on track with gross margins. The gross margins goal is 40%. They've been maintaining that, and it looks like it's going to happen. Like they're going to be net profitable. For full disclosure, I didn't own the stock prior to me writing this report and finding it. I just found this stock like last Friday on the weekend, so I didn't own it. I didn't buy any shares until Monday morning. Not a big position, and I just became a holder on Monday at open or whenever my broker filled, because I put an order in like Sunday night to buy at the open.